of how the room is feeling when it comes to just money in general. And then we are going to get started with our panel. And actually it's 11:33 now. So, all right, I'm going to go ahead. I'm going to end this poll right now. We've had a few people already participate. So the results for the poll, as you can see, it says, what gives you the biggest money concern? Outside of all of the above, so I'm gonna read all of them. I'm gonna read all of them. Money insecurity and or fears. So, that, and that's interesting because I will say, it does seem that money mindset happens to be an issue that many of us have when it comes to just our misconceptions, just uncertainty. So I've noticed that's been a common theme for a lot of people. But in addition to that, messy records or no financial records and systems. So, we try. I think all of us just try. And thankfully we have Kelly Michelle Pettiford here to help us with that today. And then, tax and always owing taxes more than expected. Yes. So yes. So, being able to better project our money when it comes to having to pay the IRS definitely gives a lot of people concern and anxiety. So that is something that we will definitely touch upon later today in our discussion. So again, welcome to everyone. I'm so thankful that you all came out today for this Money Talk Roundtable. I want to do a quick intro of everyone who is serving for the Roundtable panel. So first, I'm going to start with Teerra Davis. Teerra, do you want to wave for the folks? Teerra is our money mindset professional, and her bio reads, respected by colleagues as an effective problem solver. Teerra offers years of experience as a successful entrepreneur, leader, and financial professional. In her newly released series, Money Mindset, Teerra shares a unique and valuable perspective about the relationship individuals have with money and how their views affect their bottom line. She shares practical recommendations of what everyone should do to change their relationship with money. So, Teerra, thank you so much for being a part. And Kelly Michelle Pettiford, one way for the folks. She is our accountant today, serving on this panel. And Kelly Michelle Pettiford is the founder and CEO of KMP Accounting and Associates, with over 30 years experience in financial audit preparations, complex transaction analysis, and holding several executive accounting roles. Kelly Michelle provides her clients with the necessary foundation to maintain their organization's financial health and to accelerate their growth potential. Accurate accounting information is power. So thank you so much, Kelly Michelle. She goes by KM. So if any of you hear me interchange with, I'll say KM sometimes, that's what I'm talking about. So don't be like, who is KM? It's her. But yeah, she goes by Kelly Michelle /KM. And then there is myself. I am Shan-Nel D. Simmons. I'm the founder and CEO of Nell Tax and Financial Solutions. I'm a federally licensed enrolled agent, which makes me a trusted tax resolution specialist. And I'm also a small business financial consultant. With over 20 years of accounting and tax experience, I'm a former IRS revenue agent, as well as an Amazon bestselling author and an award-winning financial contributor to media outlets such as bestcompany.com, Credit Karma, Lendio, and HuffPost. And my whole thing is, it's all about legally outsmarting the IRS so you can have less stress in your life. So with that, I'm going to go ahead. I'm going to turn this over to Teerra. We're going to allow each person here to kind of give you a real quick tip of one thing they want you to walk away with within their area of expertise. If nothing else, we're doing this early, so that way for those of you who may have to leave, you can have this before you go, or for those of you who might get a chance to watch this on the replay, you get this part and then you can come back later to watch the rest for the Q&A. So Teerra, I'm going to let you start off with money mindset.
Okay, hello everybody. Don't you know how you don't never want to be the first person to present, but then it turns into you being the first person to present. So that's just how I'm feeling right now. But I'm Teerra Davis. I am honestly conflicted with what I actually want to present because part of me is an insurance agent and then the other half is a financial coach as well. So I'm gonna touch on both. Um, as far as business and when it comes to insurance, one of the key things that I kind of want to point out for up and coming business owners, even those who've been in business for maybe 10, 15, 20 years, and you still need some advice. With insurance, a lot of people, they don't really classify, they consider the property and casualty side, but they don't consider the life and health side too much because of the simple fact that they don't consider life and health a good investment for their business. Sometimes they feel like it's a bit of a waste. And of course, on the property and casualty side, you got to have your business insurance and different things like that. However, on the life and health side, we offer things such as like business continuation, key person insurance. So let's say if you're in business with a partner or you have a key person, executive or somebody who is kind of irreplaceable to you. Those are the people who you kind of don't want to disappear, but you already know that if they do, you're going to have to replace them somehow. A lot of times they come with additional finances that maybe we don't have at that time. With business continuation proposals and key person proposals, we work out all of that information for you. So you get the opportunity to write out your plan just in case you disappear or your partner disappears or your key person disappears. And by disappear, I mean, disability, death, or if they just no longer want to work for you anymore, or they want to retire. If your business partner wants to retire, you could do something like a buyout agreement. Because of course, if your partner is leaving the business, you're going to have to come up with whatever their buyout amount is. So you're going to have to come out with their half of the business valuation. And you don't want to take that from out of your bottom line. So I'd rather take that from out of a plan that I actually put in place so that I don't have to come out of business revenue in order to buy you out. So that's one thing that I wanted to talk about. The second thing that I want to talk about, of course, is the money mindset side. A lot of us, we have a real shaky relationship with money. A lot of us, we grew up kind of, well, it really all depends on your upbringing because some families, they were never taught how to effectively manage their money. So you either have a kind of scarce mindset where you're pinching pennies and you want to hold on to every single cent or find every cheap way humanly possible to fund everything. Or you're on the other side of that spectrum where you overly spend for things and overly maximize and you're sitting over here going, where did that $100 go? Or where did that $200 go that I just had in my bank account 5 seconds ago? A lot of times it comes with our money management skills. So if we can't properly manage a budget or different things like that, then that's something that we have to learn in its entirety. We got to learn how to budget, and everybody take budgeting as such a bad word, but it's really not. It's really you just coming up with a plan to effectively spend your money. Because if you're not sitting back, I won't say counting your pennies. If you're not sitting back trying to allocate where your funds go, your funds are going to go wherever. And you're going to sit back and look at it in the next 5 minutes like, I spent $100 or I spent $35. Like, for example, this weekend, my daughter is in cheerleading. I don't like participating in sports too much, but her father put her in cheerleading. They were doing pictures. My assumption was that the pictures were going to cost $10.95 per picture. The pictures cost $35 per picture and they were print on demand. And I got two. And I looked at this man when he said $70 as if his head had fell off of his shoulders. Because I was like, $70? Are you serious? But I actually allocated like $100 to go towards that day because I knew I was going to have to pay for the kids' food and whatever other activities that they had going on for homecoming. So it didn't really break the bank, but it definitely took from out of my eating budget. But luckily, they already had food there for the cheerleaders. So I didn't have to spend any money on that. But I had that set aside just for that moment. A lot of times we don't have that. We sit back and we go and we're like, okay, well, we got $700 in the bank, so I got $700 to spend. That's not the best way to allocate your finances, to sit back and think about it in that way. You got to compartmentalize things. And also with the money mindset, it comes with your mental relationship with money. A lot of times, like for me, I'm gonna use myself for example. I grew up, I want to say, with a poor mindset. Everything about my family was kind of like, okay, we have to budget, we have to go to the thrift shop, we have to find every way humanly possible to stretch money. And the way that you grow up is typically how you raise your children, how you sit back and do generations after generations. They kind of just play out the exact same way, generation after generation. And after doing like a lot of research and a lot of different things, our relationship with money could be totally different, especially if we thought differently. And if we can alter some of our thoughts, then I'm sorry, okay. If we can alter some of our thoughts, then we can optimize what our bottom line is. So let's say if you only got $100,000 mindset, like, oh, okay, well, I just want to be a six-figure business, then your business is only going to scale to six figures. If you have $1 million mindset, your business is going to scale to $1 million. So you just have to get your mindset together. A real good book, I'm going to let y'all know probably a little bit later because Shan-Nel told me to wrap it up a little bit. But I'm gonna let y'all know a really good book. I'm gonna find it in here. I have it somewhere sitting in my room. And I want y'all to actually go back and like read it because it actually helped me a lot when I first started my business. And it has nothing to do with business. It has everything to do with your mental when it comes to money. All right, that's my end of it. Thank you, Shan-Nel.
You're welcome. No, and I'm gonna explain the reason why I want to do a wrap up. We do have we have over 9 questions for sure, and I want to make sure those questions definitely get answered. And I'm giving people time to kind of get in as well. So, all right,
no problem,
not a problem. So, but thank you. And I'm hoping you guys are enjoying the nuggets that you got. If anyone is enjoying any of these nuggets, say I am in the chat. Just let me know that you're here. Say I'm enjoying the nuggets I've got so far. Kelly Michelle, go ahead. It's your turn.
You ready? All right, well, good morning. First, I want to say my name is Kelly Michelle, as you've heard. But for me, and kind of speaking on Teerra, and I hope I pronounced your name right. So if I didn't, you can correct me later. But part of my concern is making sure that you set up your records properly from the beginning. And that gives you the opportunity to make sure your business can grow. Because how I look at it is how if you set up your books right from day one, on day 1000, when it's time to go out and possibly get that business loan or get financing, your financials are going to tell the best story. It's going to tell an accurate story. But also in thinking in terms of how you think of your business, like she said, if you look at your business and say, okay, it's just going to be a mom and pop, that's how your business is going to grow. So basically what you want to do is say, okay, I want $1 million business or I want $1 billion business. And that's how you set up your business from the beginning. Your records are important. You need to make sure that they tell the proper story, for when you go to get financing. But also if you need to look inside your business and make changes, it's like crap in is crap out. You're not going to be able to make accurate decisions and actually timely decisions. And there's something else that I want people to think about. When you have your person, trust your accounting person. If you can't go to your accounting person and ask them, what does this transaction mean? And they can explain it to you so that you understand it, then I hate to say it, you need to look for a new person. They need to be able to explain those questions. But not only that, you need to be able to look at your books and be able to answer some of those questions yourself, be able to see and say, okay, I understand what's going on. I mean, you need to be able to look at them and see what is my working capital? And normally when you say working capital, that means what do I have on cash at hand that I can make use of now? Not, I have this liability, I have this. No, your working capital, you want to make sure you have that, and you need to be able to look at your financials and see what do I have that I can put back into my business and what can I use it to work for me. And something else, like I said, you want to make sure that foundation is set, but also you want to make sure there's growth potential. You don't ever want to set your books up where you can't grow, and make sure you can move with it. Remember, the financials or your accounting records flow into your financials. So if your accounting activity is not recorded properly, your financials don't mean anything. They're not going to mean anything to you. They're going to make you go into the wrong direction. So it's really important for me to tell you, records, records, records. And you want to keep them from day one. Even if you are that little mom and pop today, 3 years down the road, you're not going to be. You make sure you have them straight from the mom and pop to where I'm that big business and I've got 500 employees. And that's where you want your mind to go. I'm going to have 500 employees. Never think small, always think big, and make sure your records are correct. So when you go, it's sky's the limit. Like I say, accurate accounting is power, and the power is being able to grow your business.
Oh my goodness, did I just hear a mic drop? Was that a mic drop, Cam? Did you just
yes.
Okay. Oh, okay. That was just like a whole, at this point, did anybody else feel it? Did you feel the mic drop? Because I definitely just felt the whole mic drop. No, that was awesome. That was amazing. I totally agree. Right? Boom. Right? Exactly. I was just like, if anybody else felt that, please, just say mic drop. Boom. I was like, okay. Yes, we definitely need to have our records and everything together. And I know my topic is the one that scares some folks when it comes to the taxes. So here's the thing. Saw a hand go up. Here's the thing when it comes to taxes. A lot of people, the first instinct is you want to not pay taxes at all. You're like, it's not fair that the bigger companies are supposedly getting away with paying zero taxes. And you want to know, how can that be you in this life? Because a lot of us believe that once we step into entrepreneurship, that means no taxes. So one of the things I definitely want to kind of shift for you when it comes to that is there will be taxes. There will be. Actually, the more successful you are, the more likely your taxes will go higher. However, as far as dollar amount, what you have to start shifting your mind into as an entrepreneur is that there is a percentage gain that's at play. So that's first and foremost. Secondly, just like how Teerra was saying about making sure you have a plan in place, and Kelly Michelle's talking about having all of your records together, the both of them tie into me. Once we get to me and it's time for us to get together that tax return, every decision you have made as a CEO, as a boss, as an entrepreneur, as a leader of your team and your financial team, it's almost like a report card of, okay, are you going to owe or are you going to get money back? Are you able to predict how much you actually going to have to pay? Were you able to pay less? Were you able to qualify for credits? A lot of times, a lot of new small business owners, solopreneurs, you forget that now you're in a space where your decisions, if you plan them right, you can set yourself up to qualify for additional money to fund your business. And I'll give you an example. Just recently, with everything that was going on, they were doing a lot with giving employers credits to help them reduce payroll taxes for their employees. So first and foremost, that meant that you needed to make sure all your people were employees first, right? Secondly, having everything documented well. Because then if you did that, you then receive astronomical credits from not only the federal level, but a lot of states and counties were just handing out all kinds of credits just to everyone, because they call themselves trying to assist everybody right now during the pandemic. And now there's companies that's going to be from 2001 going forward that are going to have little to no payroll taxes because they aligned everything beforehand and set themselves up to be in a position to be able to capitalize on those tax incentives. That's one. That's just one example. That's the reason why everything that Teerra is talking about of making sure that your money mindset is in place along the way. And it takes work. That takes work. I'm not going to lie to you. That's a lot of shifts. And that's a lot of peeling away layers and everything to get there. And it's an ongoing process, because as you grow to six figures, now you got to try to get your brain around trying to think like a millionaire. And if you get past a millionaire, they got to try to think like a multimillionaire, and etc. So it's going to always be a new layer. And every time you get to a next level, you're just going to be thinking to yourself, okay, who do I have to be now to get me to where I want to go, or to maintain where I am? Because, some of us, we're like, I'm good if I'm right here, and that's okay. That's okay. Because again, being an entrepreneur is also about freedom, and you get to make that decision, that choice of how you want to show up. You have to have your records in place. Taxes is all about proof. The IRS, honestly, a lot of times they will listen to what you have to say, but it's really about what can you show me? Because if you don't have it, and if it don't match up, he does not care. Uncle Sam is very unforgiving in those regards. But at the same time, he's honestly not the enemy. He really isn't. A lot of people, what they fear is what they just really don't understand and don't know. There's a lot of second chances, if you will, different programs of, making sure you at least report what you have, and he can work with you as far as repaying. There's a lot out there as far as making sure that you have the right, and it's not about the right software. I will tell you that right now. The right software, I don't care what TurboTax or whomever it says in those commercials about like everyone's a tax professional. No, because if that was the case, they would have no need to have what they do now. They offer like the CPAs and the enrolled agents to now come in and consult with you. So if the software was 100%, there would be no need for that service. So they know that you definitely need to always have someone in your corner if you want, especially once you get much more complicated tax returns, because taxes are law too. It's a legal document. And just how it can work against you, it can definitely work for you. It's one of the best documents out there as far as getting lending. It's one of the best documents out there for you to get certification. I know Alston Tech is on here. She knows all about it. You have those taxes prepared and they're done. You can get all kinds of governmental grants, all kinds of growth opportunities. The sky's the limit, but you got to be willing to do it and do it the right way. That's all. And you got to think a little differently. It's no longer thinking like a person who gets a W-2. It's a little bit more than that. And it is a growth journey. And if done right from the beginning, you and Uncle Sam can actually be friends. So, all right. So I am done with that part. Any questions, concerns about anything that's been said so far? Because if not, I'm going to move on to the questions for the roundtable. Are you guys enjoying this so far? The chat is dead. I need to at least see if everybody is awake.
I'm listening, ma'am.
All right, Roxanne. Thank you.
You're welcome.
Thank you. All right. And I know some of you are probably busy. You might just be listening to this in the background at work. And I appreciate you so much for showing up. So, but I appreciate it. And I'm hoping that you guys are actually taking it all in. I can see that being a lot. But, don't be discouraged. Don't be discouraged. It just requires a different part of you to show up. And that's why we wanted to have this roundtable. We wanted to give you, we didn't want to give you fluff. I feel like there's a lot of fluff that's out there, a lot of just, if you believe it and you manifest it and you just, if you say Nam Yoho Renge Kyo, it'll happen for you. And there's a smidgen of truth to that. You do have to have faith. I'm going to say that for real. You do have, it's going to require another level of faith in yourself and what you're capable of. That's true. Absolutely. However, just like anything else, it's going to require a new skill set. And it's going to require a new skill set for you as a leader. That's all. You don't have to necessarily learn all the aspects of money, but you do need to become very familiar, because not only is it going to help you grow it, it's going to help you to protect it. How can you possibly hold your accountant, your financial advisor, your lawyer even accountable if you don't know it for yourself? This is how people get, squander and get stolen like millions of dollars from them. You'll hear it in the news all the time. Athletes who, they didn't know to double check things or the right questions to ask, and they lose everything. How many celebrities have we heard go to jail for taxes? Because they thought it was handled. Yep. Anne from Austin, Texas said, everything you said is true. Without good bookkeeping, it would be hard for the CPA to get you the credits you deserve, and funders will believe you are serious about your money. Absolutely. Absolutely, Anne. And that's a good point. Serious about your money. Sometimes, and real quick, I'm gonna get to these questions at 12 now. I got one more minute. Many a times, the reason why some of these people did not get PPP loans or other types of lending, just outside of just the PPP, just a regular normal day, because there's people who are like, I have good credit. I have, my company makes money. Why am I not getting loans? It's because you may not have had your returns prepared or not prepared correctly. Your records might be all over the place. And trust me, banks are familiar with what looks right and what doesn't look right. And if they're pretty much, I'm gonna tell you the way that they're gonna look at it. I'm gonna give you guys a little tidbit. Definitely take note of this. If you're not taking care of your own books and records and your own money, how am I going to trust you with mine? Would you trust somebody else with your money if they're not even taking care of their own? Absolutely not. You wouldn't even give them a nickel, let alone, $1,000 loan, $10,000, $100,000. You're not going to do it. We just don't do that, because it's like, I need for you to be able to take care of what you have, and now I can trust you with what we can offer you. And it starts with just really basic, simple, if you got to change your mindset to get yourself around it, wonderful. If you need to get some systems in place, awesome. And definitely make sure that you report as you should to the IRS as it happens. So, all right, it is 12 noon. I kept my word. I'm going to get to these questions. All right, Teerra, you are up first. Again, yes, you're popular today. Okay, Roxanne asked this question. She said, as a businesswoman, I want to know, can you maximize my money to work for me while I'm or how can you maximize my money to work for me while I'm building the business?
Okay, so Roxanne, I got a question for you so that I can answer your question properly. By maximizing, can you just define that for me?
So when I say maximizing, I'm in the middle of transitioning. So I currently work for the federal government as well as building my real estate business. So what I've been doing is using my own funds to fund my real estate. So in doing that with COVID and everything going on, everybody keeps saying, look at the stocks. And I did invest in some stocks. So when I say maximize, what I'm looking at, what can be a good tool where I could put my money to give me a reasonable return. And for example, if you go to the banks right now, they'll offer you like a share certificate or a money market account, and that's at like 0.46. I was like, I don't want 0.46. I want 3, 4, 5, 6%. So that's what I mean, say maximize my money. So I want to make my money work for me in a way where it could drive where the direction I'm trying to go. I hope that provides.
Yeah, no, actually, that actually helped me out a great deal. Thank you. All right, Roxanne. So number one, congratulations on starting your real estate career. I actually used to be a real estate agent too. So I definitely understand you wanting to invest in that business in order to maximize. So with that, yeah, no, I wouldn't go to banks. I actually used to work at a credit union and a bank, and both of them, yes, they do give not the best rate of returns on their CDs, money market accounts, checking accounts, savings account, nothing, because they're getting like 18% on the money that they're giving you 0.46 on or 0.046 on, really. So I guess my suggestion to you, I understand that, you've invested in some stocks and some different things like that. What I actually invest in currently is Forex, so foreign exchange currency. And that right there, that requires a whole nother skill set unless you find like a person or a broker who is willing to do that for you. But a easier way to do that, and investing in stocks is a good way as well. Um, but you gotta know how to work the stocks. That's the only difference. So if you know how to read the stocks and how, stocks increase, decrease, you could tell when the market's about to turn and different things like that, then you could potentially be a good candidate for foreign exchange currency as well. Because the stock market does the exact same thing that the foreign exchange market does. So if you want to look into that, I do have some additional information on foreign currency exchange if you want that. It's a few booklets that I do have that I could give you, no problem at all, or as a resource that all of you can use if y'all want to look into that as well. But that's a good way to actually increase your money. I've actually used it multiple times in order to assist in like creating down payments for a house or starting my businesses and different things like that. Because with the foreign currency exchange market, you can, I won't say flip your money fast, but if you know how to market it, how it's working, then yeah, you could actually flip your money fast in foreign currency exchange. Also, with real estate or with any business at all, maximizing your money. So you got to think about, what you want to do to print out flyers, business cards, different things like that. I won't say go the cheap route, go the quality route. Not everybody's going to come to an open house and, pick up a flyer. Not everybody's going to come and, get your business card. So make sure that you are getting quality and quantity when it comes to the supplies that you're utilizing for your business. I hope that helped.
Awesome. Thank
Oh,
you.
no, it did. Thank you so much.
Okay.
Thank you so much, Teerra. Thank you. All right. So the next question is from Wayne Mendoza. You just said you wanted to speak to the money mindset professional. So Wayne, I guess the floor is yours if you want to ask your question.
I didn't really have anything specific in mind, but I just wanted to kind of learn more about, I am in an Alston Tech business strategy course. So I'm working on starting a business. My goal is to get financing for opening a fitness studio, which is my profile picture here. And so anything to help maybe strengthening credit reports. Mine is pretty good, but it can always be better. And also what maybe beginning steps are great to getting close to getting a loan to finance a new business would be great information for me.
Okay, no problem. First and foremost, congratulations on the beginning stages of your fitness career. As far as improving credit and additionally like coming up with finances to get this business started. So I actually know a few people who own their own fitness studio. You don't have to technically start off in like this big, like open brick and mortar. I know a guy, he actually opened up his first studio in his backyard. So he got like one of those little shed things, nice little size. He would take his clients out there, it's heated. Everything in there is clean, serene. He still actually does a lot of his stuff out out back his house. He don't even have to travel for it. He just had people come over and they meet him at his studio in the backyard. And he has a very thriving business where he was actually able to open up a second brick and mortar somewhere else. So I would probably say, of course, with the credit, work on your credit. Of course, everything is based on the longevity of how long you've had a credit file, how often you pay on it, what your credit card utilization is. So if you utilize your credit cards all the way to 100%, yes, your credit score is going to drop. If you utilize it to about 30%, it's going to boost up a great deal. And once you pay them off, it's going to skyrocket your account. Some accounts, credit card accounts will do that. Regular loan accounts, they won't. It'll do like a backfire type of thing on you where you pay it off and they're like, oh crap, you paid it off. Okay. Now we're going to just either A, keep you at the same score, or B, maybe drop you 2 or 3 points because you paid it off, which I find completely backwards. But credit card accounts, if you pay them off, your credit score will boost. And if you take them down to like 30% in utilization, it'll boost up your score as well. So you just have to worry about how much in credit you have, the longevity of it, and how much you utilize. Focus on those 3 areas. As far as saving up money, if you have some money saved up already, that's amazing. If you need to, you can do a whole bunch of different type of loans if you want to start like your own brick and mortar, or you can find different things like investors. They have different types of investors. You can get an angel investor. I would not suggest a hard money lender, because they're going to be expecting their money within 90 days to 6 months. I say, so they'll be going off of how much your business is going to make. Never get a hard money lender, especially if you know that your business is going to take time to progress. But for me, if I was going to start a fitness business, I'm not going to say just start off small. I'm going to say start off manageable. So something manageable for you where you could grow into it. If you want to, like, it's different places where you can go and you can actually start now and they'll pay you to like hold different fitness classes. So let's say you wanted to go to Y. The Y is always looking for different fitness instructors. They're looking for people to do classes. They're looking for people to offer different services. And then you could broaden your horizon from off of there, because it's a lot of different fitness instructors who actually do things on the side that are in the Y or in different gym areas. So you could do it that way as well. But if I was going to, I probably wouldn't go the loan way. I would probably go the kind of like raising capital. And then once I get about 50% of what I'm looking for, then maybe go the loan way. That way you'll have 50% of the capital already yourself, showing them, hey, I am fully invested in this business and I am looking to grow and I'm serious about my craft.
Awesome. Thank you so much.
Appreciate that.
No problem, Wayne.
Thank you so much, Teerra. Okay, so the next question comes from Kay Clark. Anyone can answer. So Kay, I'm gonna let you answer this one first. It says, what vehicles to choose to grow your money when you are late to the savings habits? Talking about 401ks included. So
Okay, so when you're late, a lot of times if you have an option with your employer, a lot of times when they tell you to invest if you're late, I know a lot of times they'll try and tell you to go where you know you're gonna earn the most, where you're gonna earn the most money. And what I mean by that, they're gonna try and tell you to go not the slow and steady, but where they know that there's a lot of growth material, because they're thinking that if you go in stocks and bonds and you're older, you have a higher, you're at a that's a high risk. They consider that high risk because, so they're going to tell the younger people to go more towards that. As you get older, they're going to try and tell you, I can't remember exactly. It's like they'll tell you kind of go mutual funds, whatever, but they'll just tell you to be careful of your mix, that if you do have some high risk they'll tell you to lower that and then kind of go more with the mutual funds to try to make sure that your portfolio will grow.
Okay, I'll hop in.
Thank you.
All right. So if you're late to the game, it's perfectly fine. Doesn't take much to catch up, really. I'll say everybody may make it seem like it's hard to catch up, but it's really not. So what I did to start catching up to, coming into the money game, I wanted to start my own businesses, do a lot of different things, and a lot of stuff I did, the growth way, me gaining the income by myself. So one thing I learned about was tax lien investments, because tax liens in, I don't know what state all of y'all are in, but we're in Maryland. And if as long as y'all are in Maryland, the tax lien return here is 18%. So you invest what? That's crazy. I gotta use a calculator, y'all. I'm sorry. Don't judge me. Don't judge me. So let's say if you did like $1,000 lien, right? That's $180 back on the investment, right? Because that's 18%. But let's say you do another one, that's an additional 18%. You do another one, that's an additional 18%. So you just keep reinvesting the same money because you're not doing anything with it. It's just an investment fund. You get a good return on your investment. That's a slow way to do it. Another way, of course, is like I said, with the Forex market, you can do it that way as well. I actually started, well, I didn't start it. It was somebody else that I knew that started it. They did like a 90-day plan. And I was terrified. I'm not gonna lie to you. I was extremely terrified because I feel like if I don't have control over a situation, like you have no control over the stock market or foreign currency exchange market, you have no control over that at all. So whether this thing goes up or whether it drops, you're like, oh crap, okay, I gotta get out. But the market actually makes it easy for you to read it. And that's what I had to learn. I had to learn how to read the market before anything. And once I did, then it became easy for me to tell whether it was going to be growth or whether it was going to drop. All right, give me 1 second. I can actually do that too. But if you, like I said, if you learn the market, you can do it easily. And that right there, that's good growth as well. You can actually double your money within 30 days. So if you put in $1,000, you get $2,000 in 30 days. If you put in $2,000, you get $4,000 in 30 days. You just have to know how to manage it properly and know how to read the market. And as far as annuities, I can touch on those as well, unless you want to touch on annuities. Shan-Nel, you want to touch on annuities?
I was just going to say with annuities, because as an option, other than of course put your money in, and that you, as you get older, they allow you to legally contribute more because of the age. A lot of people forget that IRAs actually allow you to use them, and it's a special way it has to be set up, but you can actually put real estate in them. And, as you flip them and as you use them to flip, and mind you, everything has to happen within the IRA. That is a way to very quickly, especially like right now market, if you had everything set up right now would be probably a great way to, vastly increase your, can I do a webinar on that? I surely can. To put your your real estate into IRAs. And then of course there's some folks who actually have rentals in there as well. It's a great way to further increase your savings because it's all in the IRA. There's not going to be any income or anything that's going to get reported because it's literally all sitting in there, and it's not going to be available to you until you actually take distributions in your retirement. But it is a way to balloon those annuities. And that's outside of 401ks is literally almost like an investment stock. It's just literally you put your money in, you let the market do its thing, and then it's going to go up, it's going to go down. But IRAs have a lot more flexibilities right now. Because of some of the tax law changes, Roth IRAs are becoming very attractive. So, and because of what's great about a Roth IRA, what's always been great about them is the fact that you pay the taxes on them now. So when you take it out in retirement later, it is literally free money. So, versus you having to worry about it in return. Because I mean, I can only imagine what some of the folks are going through right now, where they may have had a Roth from God knows when, or an IRA from whenever, or retirement account from whenever, and they're having to use their distributions now. Their tax rate may be different than what they had planned on. And so now they're having to pay taxes on it, and they're not getting a chance to fully enjoy that money. Whereas if you made your contribution now while you're working and you're employed and you pay the taxes on it now, later, when you're not quite sure what the future may hold, you have money that's there for you. So,
I got a quick question
yes,
for you. Okay, so because like I said, I worked in insurance for about 12 years now. So I'm sitting over here, I'm thinking, sorry, Roxanne, I see you do have a question. So I'll ask my question really quick. So I know that with life insurance, I've been in it for 12 years. They always say you can take money from out of your life insurance policy without any tax implications. Is that true?
If it has cash value. If it has cash
value, you have to be taxed?
No.
Okay.
Because it's getting treated usually as a loan situation.
Okay.
Because the idea is that you're going to be repaying. It's no different than if I was to kind of borrow from my 401k, or such, basically, because you're going to repay it back. So when you take it out to use it, it's getting repaid back, or it's going to just reduce what your beneficiaries are going to, what your beneficiaries.
Okay. All right, because that right there, that's another way of growing your
cash
money,
value.
like with the news you shared with the cash value. Because I know with IUL's Index Universal Life products, like I was selling these like hotcakes at one point. And it's because they earn anywhere between 0.75% to 15%. And by the time you retire, you can have a nice little nest egg by the time it's time for retirement, and then schedule distributions from there so that you can fund your retirement. You can have it come out every single month. You can have it come out lump sum for the year, whatever you want to do. But that right there, that was another way that a lot of my clients were actually using their money to work for them. So that's another idea as well.
Awesome. All right. So Roxanne, I'm gonna go ahead and let you get the mic.
You mentioned about the new tax law, because you talked about putting in an IRA, but like in doing that, they passed that Secure Act. So
not the traditional IRA. The Roth IRA is going to be your friend.
Okay. So
not traditional, not the regular, not the Roth.
Okay, so not the self-directed, none of those others were impacted, I'm guessing?
So self-directed and all of self-directed and simples, they go by a totally different set of rules, because that's based on you being an entrepreneur, basically, and it's based off of you. But what the ones that they're talking about right now predominantly is about traditional IRA. So basically, like you as an employee, or just actually anybody, because even those who are self-employed can get one of these. This just a regular traditional IRA. You put your money in, you let it grow. It usually has the highest amount that you can contribute in a year. That IRA, because the Roth IRA, they purposely limit how much you can contribute to it, because they know how beneficial it is. So that's the one.
Thank you.
You're welcome. So we're gonna move on, because I know we could talk about this probably all day. So maybe ladies, if you guys are up to it, we can maybe do like a retirement money talk roundtable. You can talk about putting your records together later in life, all that good stuff. Because especially what would happen with COVID, I'm gonna tell you, record keeping, estate planning, we may just have to do this. I've already got the wheels turning. Oh, the wheels are turning. Y'all wait to see. To be continued. Okay.
I just want to pop in and ask a quick question.
Yes.
I'm a visual learner. Is any of it, are you going to provide like slides or show it visually that we can see it and have a better understanding? I mean, I understand how to manage my money, but like I like to see like maybe like a Excel or, a pie chart, just showing us the different areas of how we can do better and be better.
Sure. Usually when I have a real webinar, like this is, like I said, this is a table talk. So this is like what we're doing. We're just kind of answering questions and we're just talking with you. But like when I do an actual webinar, that's what happens. There's usually a visual.
Thank you.
You're welcome. Okay. Next one. This is, and I apologize if I'm saying it wrong. Teerra Brown, did I say it right? Please tell me. Is she still here? Oh, I saw her earlier. She may have left.
More.
Okay. Well, her question was, do I have to post employment tax for myself off of not drawing revenue? Okay. So I know that comes up a lot about when you don't take draws. So really quick, just to give everybody a general understanding, draws is literally when you take the money that's left after you make your money, you will have expenses, and then it's the profit, the money that is left. And then you as an owner can typically take that money to use as you need. Now, it will depend upon what entity type you are set up as. That will determine whether it will be taxed for self-employment tax or not. Because that literally is when you are working for yourself, self-employment tax is your payroll tax, basically. So when you hear people talk about self-employment tax, it is your payroll tax. The best way for you to think about it is when you look at, for any of you who have worked a W-2 job and have earned wages on the pay stub, how it will have Social Security and Medicare, and you'll see those amounts coming out of your account. Social Security is that times 2, because you have to pay it based off of you acting as the employee for your company versus also being the employer. Because as employers pay for their employees' portion of their Social Security and their Medicare. So now when it is a draw, technically, like if we're talking about the person who reports on just a regular Schedule C, so as a part of your personal tax return, it's just another form. Yes, you are going to end up paying taxes because the draw is just your profit. And that bottom number is going to get taxed. So the answer to that shortly is yes. However, if you're something like an S corporation, when you're taking a draw, it will depend on other factors. There's a term called earnings and profit. It's based on how much you have contributed to the company. It's pretty complex, and it's a tax term, but depending on, it's based on what they call bases. So those are like 2 different tax terms at play, but depending upon if you have bases or not, will determine if in fact, if you have like a corporation, regular corporation, or an S corporation. So like depending upon how complex your tax return or is set up, that's going to determine whether or not it's going to be subject to self-employment taxes or other taxes. So sometimes it's taxed at a capital gain rate versus other tax rates. So, but for most people, most small business owners, most people usually file on their personal tax return. Most people file on Schedule C. And most of you, if you have a profitable business, is subject to self-employment tax. And that self-employment tax is the employment tax. So for you. So I hope that answers that question. And I know she's not here, but do anybody else have any questions about that? I know that's, because trust me when I tell you, I have a whole thing for that, a whole nother workshop for that I've done several times with visuals. So that breaks that down further. But Yeah. All right. So the next question is from Monica Nesbitt. It's anyone, how to budget. Kelly Michelle, I'm gonna let you go.
Well, I mean, remember, a budget is basically a plan. So basically, and I guess if you're doing it from a business perspective, you're going to take, I mean, if you have, let's put it like this, if you're just starting out, you're going to do guesstimates. I mean, I hate to say it, you don't have anything to start from. So you're going to go guesstimates. And I guess the best thing would be is you can kind of look around for whatever your business is and and how you're planning on running your business, and look at like businesses and kind of see what they're flowing with, and then you can plan your budget basically. And also depending on if you're going to do brick and mortar, if you're going to start where you're going to start small, let's just say you're not going to do brick and mortar, you're going to kind of do it out of your home. I would still kind of budget, like for rent purposes, say, okay, I use so much, say I use 20% of my dwelling. Well, 20% is going to be considered part of your rent. And so you just kind of, and you think of 20% of all your overhead costs, like the electricity, you're going to use internet, you're going to use phone, you kind of budget that towards your business. And then you kind of plan what your business is going to be. If it's going to be t-shirts, you're going to kind of go, well, who am I going to buy my t-shirts from bulk? And you kind of just plan that way. If you're doing 5 years, let's just say you're in business for 5 years, if you're going to budget, you're going to look back over at least 3 years and kind of average up and see how your costs grew, how those things were affected. You're going to use the kind of percentage, and then you're kind of budget for the current year. So you're going to kind of look at history if you have it, and kind of budget from there. And if you're just starting, you're going to kind of look around at other like businesses and kind of think of what your overhead is going to be, what's your cost, what's the cost of goods sold, if it's t-shirts, whatever you're doing, you kind of think of all those things, and then kind of come up, well, what am I going to sell it for? And so you're just going to kind of budget, budget that way. And then as you actually have things, actually after you have real data, you kind of want to compare that to your actuals, to budget, to kind of see how far you're off, to see if you need to make adjustments, if not. And then you can kind of budget from there and kind of plan, if you know the cycle of your business, and kind of see where you can kind of budget, or what you do projections of what your year and what's your revenue is going to be. So it's looking at history, like I said, if you have it, or looking around for like businesses and see what kind of expenses and things that they have, and then kind of prepare your budget. But like I said, when you're first starting off, it's a guesstimate, but a budget is something that can change. So don't think that whatever I budget in, let's say January, and I'm looking at March and I see I need to make changes. Remember, your budget can always be adjusted. So don't ever think that budget it's etched in stone. It's just a guidance. So I hope that helps.
Awesome. Also too, I know for me, I always think of it more of like as a spending plan, because versus a budget, because I think budget also too gives people an idea of there's a limit. And I mean, and you definitely want to stay within a guide, but at the same time, there's just some things that you're just gonna have to spend money on. And we're just trying to figure out ways to be more responsible in our spending, and just keeping track of the spending too. So I think that also kind of gets some of the, I know that's just a change of a term, but I find when you just change the terminology sometimes a little bit, versus saying spending plan versus budget. Spending plan sounds like, oh, I have control over this. Budget sounds like you coming at me with a stick, like you better control this money or else something's going to something's going to happen to you. But spending plan sounds like I actually sat down and said, okay, this is what I'm going to do for the month, and I have control over this, and I can tweak this, and I can, exactly. I like spending plan too. So that's what I'm like. So, spending plan sounds a little bit better, because, it gives you power and control, and it makes you have, accept the fact that you are in control of your decisions, and you can always come back, like you said, you can always come back and tweak it. It's not something that's etched in stone. Kelly Michelle made a great point there. It's not etched in stone, but the biggest thing is definitely being able to keep track of the trend of what you're doing, and then always adjusting back to your plan.
Can I
So
chime in?
Shan-Nel, this is Ann. I want to throw one more thing out there.
Mhm.
You know, one of the things about budgeting, whether it's personal or business, you really have to discipline and get your mindset right, because if your mindset hasn't changed how you feel about money, no matter what you do, control, spending plan, whatever you want to call it, it's just not going to work, right?
Yep.
So that mindset has to be the passion that's going to drive you to reach your goal. So like when I wanted to get my finances together 4 or 5 years ago, after helping, God knows, all my family members, right? And they left me with a lot of, unresolved debt, that because I was so kind to help them and I got myself in trouble, right? So I said to myself, you know what, in 3 years, I want to be able to pay this stuff off and be able to save for a home at the same time. My mindset had to be on focus, on that singular point of a goal. And even though, like you said, it's true, you have to shift, you have to adjust, you have to still buy what you have to buy, every month to maintain. But at the same time, I made a point that if I can put 3% of my check on the 401k, I could put 3% in the savings account. Or even if I couldn't put 3%, I put as much as I could in my savings account. And I knew that that money was for a purpose. So 3 years later, my credit score is over 740. I have money in the bank. I'm about to close on my second house. That's the goal that you got to reach. If you really want to be having financial freedom, and they come into class and they say, I want a business because I want financial freedom. Financial freedom does not always come with the business. It comes from discipline of your own understanding about money and how you manage money to get the things you want. Because, if you have it on one end, you're going to have it on the other end. And that's really the bottom line. And I really love this webinar because it's really putting in your face that all this great information you guys are putting out there, if you do not conform your mind to do these things, it's not going to happen. So I just wanted to throw that out there and share mine, because I do believe that we can all achieve things if we really put that dedication and use that as a passion to propel us forward and have that economic power.
Thank you so
Congratulations, Anne, on buying your second house.
Yes, ma'am.
I just wanted to chime in for a quick second. Within your spending plan, because I don't like the word budget either. I actually do like spending plan. I use it all the time. But within the spending plan for business owners, my suggestion is also to add a miscellaneous section on there too. I know a lot of times we want to put, okay, I'm gonna need this much for this much for this much for this, and bop. But a miscellaneous, because when you first start in the business, or when you're, you could be a year and 2 years, 5 years, it's always going to be those miscellaneous things that pop up. An example that I have, I actually had to buy a thermal printer because I started an Amazon business. And I was using my regular printer, which was costing a lot for ink. This thermal printer uses no ink. It uses heat, and that's it. And it prints out the labels. I was like, wow, so I've been wasting this much money on ink, and I could have been using a thermal printer. So make sure if you are, starting your business, like they say, do your research first, find the things that'll make your life a lot easier. Because I found this thermal printer and it definitely made my life a lot easier. And put a miscellaneous fund on your spending plan, so that if there are any miscellaneous costs or anything that you need to buy that's not in the plan, it still won't throw you out of whack.
Thank you. And you just helped me, because the other day I was literally thinking, I was like, my ink costs like 60, 80 something bucks. It's ridiculous. So you just helped me out. Because thank you so much. Oh my goodness. Because I've been really thinking of other alternatives, because I was about to just make everything no more paper. But you can't do that. But yes, but another thing, I just real quick before we move on, I know a lot of times a lot of people also ask about, when it comes to spending, investing, and the first thing they always bring up is stocks, and then the next thing are the annuities and retirement. But especially since pretty much everyone on here is a business owner or curious about business of some sort, investing yourself, you're aware that Stocks is just you investing in another business. And now it's an existing business, sure, and they may pay you back some dividends, sure. But, think about it, invest in yourself, because the more money that you put into your own company, like Teerra was saying, like you get the thermal printer, or you get, you finally hire that VA that you've been so desperately wanting, or sometimes it's even an investment in yourself. Might be, there's a lot of ladies on here, might be getting that housekeeper to help you out, so that way you can free up your time. Okay, let's be clear. Free up have someone cook the meals for you 2 or 3 days out of the week, so that way you can have an extra hour or so to do the things that you need to do to make you more money. You'd be amazed when just taking out that extra $40, $100 or something a month and putting it back into your business and back into yourself, how it grows your own earning ability. And now you've made, more money, because now you can focus on doing what you do best and doing the sales. So also too, let's not forget about, and I'm not, because I know a lot of times when people hear about investing themselves, they're talking about coaching. No. I'm talking about practical investing in yourself, because coaching helps too. We do need consultants, we do need assistants. However, in addition to coaching, in addition to assistance, in addition to building out your team, look at other ways that you can invest in your business to help you make money. And it's not always just another business expense. So sometimes it's also on the personal side that's going to assist you to free up your time. So, all right. I'm going to next question. Oh, okay. So this question is for everyone. I saved this for a little, I think I have one more. This one was from Dixie. I want to make sure I answer this one. It was a tax question. And I thought it's cute. What is the best write-offs when preparing your taxes? The best write-off is the one that actually happened. Seriously. No, sir, but seriously, there are no best when it comes to taxes. When it comes to taxes, it's what helped you make money that you can prove that you paid for. Seriously, that's the honest to God answer. So that answer is for your business. That's why the tax law itself says ordinary and necessary. Code section 162 for anybody who wants to actually look that up. But the law says ordinary and necessary. And then the next law is for the production of income. So if you fall into the lines of those two, the tax law leaves it extremely broad initially. And that's for good reason, because the IRS covers literally every way. I always say all the time, for all the ways you can make money is all the ways that it is taxable or non-taxable. I say it all the time. So if you really think about it, there's people out here who are making money for giving out hugs. How do they what can they deduct? Their sweaters? Not, because it's clothes. But you get my point. They probably can deduct though driving to their clients, establishment to hug them, because that would be an ordinary expense for them. But there used to be a joke when I used to work for the IRS about the traveling dentists. You get the dentist office who says they have over 20 something thousand miles, but they have a whole office. Where are you going? Like no one, I don't think anyone has teeth that requires you to come and come overnight to come fix it, right? It's like, where are you going? So the real answer is there is no best. There is what works for your company and what makes sense for your company and what you actually paid. That works for you. Now, if you're thinking about as far as, I don't know, like, as far as like, I know when it comes to the larger expenses, a lot of times people are confused. Should they take all of the expense right up front, or maybe take it over some time? That again, That truly does depends, because that depends on what you think your future income is going to be and your current financial situation today. So if you're in a situation today where you really just don't have, you don't have the money to pay maybe the little bit of taxes that you would end up having on those profits, right? And you can qualify to take the full deduction now. Some people will say take it right now. Others will say, oh, we know next year we have a large contract coming in, or we have a big client coming in. So we need to push as many expenses as possible towards the future. We're going to make the purchase today, but we're going to like make this large purchase today, but maybe expense it out, which is called depreciation. Right. Kylie Michelle right now is so excited because she's like, you're talking my language. But yes, but yeah, it's depreciation when you take the expense a little bit over time. And this is where, again, being in charge of your company and having, being confident in making those decisions. This is how you sit down with your team, because usually someone who's operating at this level, they're going to talk to at least somebody. That's like, I love what Kelly Michelle said at the beginning when she said, you need to have somebody you can trust and you can talk to, because this is going to require you guys literally sitting down and creating a plan. It could be your tax professional, it could be your advisor like Teerra, or it could be, your accountant or your bookkeeper like Kelly Michelle, but you need somebody that you can sit down with, because if you are not financially savvy, notice what I'm saying. There's two different scenarios at play with just the situation I'm putting up right now. Do we take the expense today or do we take it later? Why would we take it later? Why should we take it now? You don't need to know exactly all the debits and credits, but you do need to know the bottom line impact. And this is where, Ann had even talked about it from Alston Tech. This is where having a totally different mindset. And mind you, this takes having a good team, good education, knowing wonderful people and resources to talk to, and changing how you approach things as a leader of your business is all going to come into play, and being able to have that kind of conversation. Notice I didn't use too many big words. I didn't get all techie or crazy about it, but this is the kind of conversation. And this is also how you hold the person accountable. You got to be able to sit across from them and say, well, tell me which ways you can benefit me today. If it's a today situation, or we just secured this account, it's going to be, a few $100,000 in the future. What can we do now to prepare for then? And then they're going to start spitting off stuff. You need to be able to follow that conversation. Or you tell them, explain it to me so I can understand. And if they can't do either or, that becomes a problem. And you need to start making other considerations. But as far as best tax deductions, the best tax deductions are the ones that you qualify for. So, and I'm going to move on to the absolute last question. The last question is for all of us. So I'm going to let Teerra take it, and then KM, you can take it, and then I'll end it. It says, is there anything you wish you had known before you started your financial and entrepreneur journey? And what advice can you share with others about your hard-earned wisdom? Go ahead, Teerra.
Oh, Lord. So the one thing that I wish I knew back then that I know now was my actual relationship with money, because I was starting businesses after business after business. I was one of those firm believers that you need like those 7 streams of income. I still am a firm believer in that, but it just all comes in effectively managing those businesses. But back then I had a real poor mindset where everything was a budget, and like I probably was on like the thousandaire mindset. Like we wasn't getting the 6 figures. We was getting maybe the 50,000, 60,000, somewhere around there, but we wasn't exceeding that. So it was like okay, well, once you reach your cap, that's it. And once I learned where I was going wrong, then my income started to grow. because my mindset started to change. So this is the book that I was actually going to tell y'all about earlier. Secrets, Lord have mercy, look at that lighting. Secrets of the Millionaire Mind. And it's by T. Harv Eker. So T Harv Eker, Eker, and it's the Secrets of the Millionaire Mind. And that actually helped me to, that actually helped me to surface a lot of the things in me that I didn't know was there, because a lot of stuff comes from our parents. And I realized that my parents, although raised me quite well, I do love them to death, but their relationship with money was trash too. So being that their relationship with money was trash, and I know my grandmother and my grandfather's relationship with money was trash, now I'm feeding that on to my offspring, my children. And I was like, I don't want that. I want them to know that money is only the means to pay for what you want. So you got to create a different mindset for yourself to say, okay, well, don't put a cap on it. Or if you do put a cap on it, know what you can handle. Because a lot of times people say, oh, I want $1 million, but they can't handle $1 million. Some people want 6 figures, but how much in 6 figures do you want? So it took a lot for me to switch my mindset and create that newfound for me. But that's something that I wish I had known back then, because there was a lot of businesses that came and went. A lot of stuff that I failed at, and I was trying to figure out why they were failing. And it's because my mindset wasn't right, and I wasn't disciplined enough. I wasn't consistent enough. It was like I was expecting several $1 billion overnight, but in all actuality, I couldn't handle several $1 billion overnight. Like, I had a whole bunch of businesses, and everybody was like, these are amazing ideas. This is something great. You could definitely do this. This will be awesome. And I'm like, yes, it's going to be great. And they never left the floor. They never left the floor because I couldn't handle it. So it was like I had given up on them. Now, once I finally got to the level of, all right, now they taking off the floor, but then it became still a ceiling because I still had a janky mindset. So I'm not saying, you gotta have a mindset and you gotta put in the work. That's what it is. You gotta have a mindset and you gotta put in the work. And I do recommend that y'all read this book. And it's gonna help y'all a lot. If y'all want to, y'all can read my books too. I have a Millionaire Mindset series. No, not Millionaire Mindset, Money Mindset. There we go. Money Mindset series. And it's actually called Money Mindset by Teerra Davis. It's like a 6-series thing. And it goes through like the different phases of life. So it starts off with just like a general book, where it just goes over money habits, how you think about money, how you deal with money, passive income, different things like that. And then it goes from teenage, from like 12 years old, all the way up to retirement. And each book is like a different phase in life. So you can read all about that, and whichever phase you're in, I say that's the one that I would recommend. But I say, I know I hand them out to a lot of kids in school because we weren't taught how to deal with money in school. So it's like, okay, here you go. So that when it comes time for you to go to college, you can know what to do and you don't have to get loans and do things like that. I say, and if the parents, they start buying or investing in their mental now, the kids really won't have to pay for college because they already had the funds available for them to go to college. So like I said, it's all a mindset thing. My parents, they definitely made me get loans because they didn't have the money to pay for my college education. So I had to find a means to pay that off. I say, so I ended that generational curse, because if my kids want to go to college, I'm going to pay for it, because I don't want my kids to be broke trying to pay for their college education from the time they're 24 up until the time they're like 40, 50 years old, because they've been putting it on forbearance or trying to find different ways to not pay for 20, 30 years.
All right. Well, thank you for sharing, Teerra. Kelly Michelle, same thing. What do you wish that you were told before you started your financial and entrepreneurial journey?
I think for me, it was very interesting. And I'll say what I wish I would have been told, or maybe even got it, because I think I was told, I didn't hear. So let me say, so be able to hear, listen, and be able to receive, because people could be telling me all along and I don't think I was listening. I was waiting for the perfect time, and there's no such thing as a perfect time. So if you're ready to go for it, and that's today, my thing is go for it. And I say one thing that somebody told me in my job, and it kind of stick with me: don't be afraid to fail. Don't look at it as a failure. It's a lesson. So it's not a failure, it's a lesson. Because if that didn't work, then maybe plan C will work. And I also say, with that plan A that didn't work, don't give it up, because you never know. You might need to go to Z and then A will work. So my thing is, there is no perfect time. Today is the perfect time. If you wake up and you've got a plan and you want to try and execute it, and don't be afraid to ask questions. There are going to be people who aren't going to tell you, but trust me, keep asking, because somebody is going to share with you and help you and say, okay, I'm in the same line. I tried this. I wouldn't try that. And listen to them. I mean, yes, listen to them and take it into place. But I will also say, don't be afraid to try. That's all I can say, is get up and do it. There's nothing to it but to do it. You'll never know if you don't try.
Okay.
Mic drop again. It's dropped.
I love it though. I love it. Thank you so much.
There ain't nothing to say. Just do it.
Oh my goodness. Girl, thank you. Oh, okay. So for myself, my story actually is very parallel to Teerra. So, in the sense of that, I grew up single parent household. My mom, I love her dearly. She did the best that she could. But I knew about food stamps before I knew about money. I'll be honest with you. I knew about the whole system before I knew anything about money, because that's where we came from. She had 2 jobs though, while having to be on food stamps. So that's why when I hear people in the news today, it's just funny to me how things always keep repeating itself, because someone's on public assistance does not mean that they're not trying to work. It's just that, it's expensive to live sometimes. It really is. And I know for me growing up, I have always been the kind of person who just looked at other people and said, this is what I won't do. I let people kind of let their lives be, my lesson. So, therefore, I know for me, one of the things that I kind of wish I was taught was just the preciousness of time. And I know that's something that we can't give back, but I feel like the way you can give it back, if for any of you, I know things that came up about starting it now and figuring it out now, because what Kelly Michelle says is absolutely true. There's a quote out there that says, when's the best time to plant a tree? And they said the first best time was 20 years ago, but then the next best time is right now. So for those of us who, we're a little older right now, we're doing it right now. We're taking back our charge and everything right now to get our money. But I know one of the things that I plan to do, and going in a way, kind of going back to plant those trees, is to make sure that the youth are getting all those things that I didn't get. And making sure that anybody else, that's coming up, that's younger than me, are getting some of the things and being told, yes, this may be your first job. Yes, this may be minimum wage, but you know what? Because you don't have any responsibilities, now's the time to go ahead and start putting money into that retirement account. Now's the time to go ahead and start, increasing your savings. And I wish I had someone who was talking to me and pouring to me before I had the house, the husband and the child and everything, because when you're trying to build all those things concurrently, it becomes a little harder and it takes a little longer. That's just the reality. And that's okay. But, if there was a chance of going back to just being use that time wisely as a younger child, I definitely would have. But it's also too, as far as this entrepreneurial journey, I will say this. We always talk about financial freedom, but I just want to kind of let people know, it took me a part to learn is you are so free as an entrepreneur, more free, I think, than you know, and it's scary. I remember I realized just how free I was when it became, you get to choose so much. You get to choose your pricing, your hours, what you will do, what you won't do, who you will serve, who you won't serve. There's so much that you get the chance to just decide. And a lot of it, I think, becomes overwhelming because we're so used to either validating someone or getting approval or doing right and wrong. Whereas right now in this entrepreneurial life, there isn't so much right or wrong. Seriously, there's just going to be choices. And sometimes they're not going to be good choices. Sometimes they're going to be great choices. And money is not always going to be the thing that's going to show you that it's great. Sometimes that's the other part of it too. You determine and define what success is for you. Because money is definitely a part of it. And you should definitely go get as much of it as you can because there's tons of it out there. I always try to tell people, all because I say I help out small businesses. Small business isn't small. And large isn't as small as you think. Some people who are saying I'm a 7-figure business, I'm gonna tell you something. As far as the IRS is concerned, large business doesn't start until you start making $25 million. So everybody who's 25 million less is considered small business in their eyes. When Forbes go out and talk to the best businesses in the world, you can't even apply for their the top 100 unless you are at the $5 million mark. And then it goes up to 50 million and 500. So I tell you that to say, not to be defeating, but to hope to encourage you, to let you know that there is so much out there for you. It's really out there. There's 7 billion of us, probably more than that now. That number is so old. So there's a lot of us out there. And there's so much money. There's trillions of dollars circulated every single day. Trillions every day. Don't be afraid. The money's there. So I always say money, definitely have your objective, have your goals, plan, go get it as much of it as you possibly can. But then also to think of what else is a success factor for you. Because when I tell you in this entrepreneurial journey, there's going to be days, I actually experienced this not too long ago. There's days where you're going to be like, I'm going to dust off my resume because this ain't it. I had a 5-figure month this month, but today I'm barely scraping in $100 sale. What's going on? But then the next month, or the next week even, you back on the ball. That is the journey. That is the life. That is truly that life. And that number will change as you grow. There's people right now who are crying broke because they had a 6-figure day because they're used to having a 9-figure day. Seriously. It's all relative. That's why I'm like, the money part is relative. You're going to have to figure out what's your other success factor, whatever that is. Is it your time? Freedom away and being able to decide what your day is going to be? Is it being a chance that you're an employer? All the above. I mean, for some people, it's going to be a little bit of all of the above, but everyone have their own thing that they're going to say is what makes them successful. And that was the other thing I had to learn in this journey, is that I get to define what success looks like for me. So I hope you all get to define what success looks like for you. So we are at 101. I want to respect everyone's time. I hope you guys enjoyed this roundtable talk and this conversation. Yes, thank you. I have several things. I'm going to put in, that is a questionnaire, that link for you, just a quick feedback. It's all of 3 questions for you to go ahead and share how you felt about the experience. Did it not? Hold on, let me stop sharing the screen. I don't know what happened. I tried to get it to share the screen and it didn't do it. Hold on.
Yeah, it was asking for permission to access the form too. So,
Oh, okay. You know what?
yeah.
I'm not even gonna worry with it. So, don't even worry with the form because
You guys were great. This was some really awesome information. I just wanted to let you know that before I drop off for my next meeting, but I really appreciated, the stories that you guys shared. And, I definitely see a piece of my history with Miss Davis, Miss Pettiford, Simmons. I think I've been through all that. I think the one thing I wish that I actually had someone that actually taught me what money really meant to me, or could have meant to me. But, my mom, she was not mentally able to do that. And I had to learn a lot of stuff on my own and went into debt and figure it out on my own. And I had no support whatsoever. I had no one that I can turn to, because back then, and I don't know, I'm probably older than all you guys over here, but back then there was no resource for anyone who was seeking financial, unless you were already in business or you already was sort of in the rich community. You'll get, other people to help you. But if you were working a 9-to-5 job, nobody was helping you with anything when it came to money, not even the banks. They just say, put your money in there and they'll use your money and don't even tell you how you can actually grow your money, right? I wish that I had somebody to do that. But now that I'm in a position that I learned, I try to give it back to everybody through my courses, my webinars, because I don't want anyone to ever feel like that they cannot achieve what they really have in their heart and desire to do. And money is one of them. So I want to thank you guys for that. I'm gonna have to drop off though for another call, but I am definitely interested in the retirement webinar. So whenever you guys have it, please invite me. I will be showing up.
Not a problem, not a problem. I'm happy that everyone enjoyed today. That is everyone's contact information. If in fact you want to be able to contact us, feel free to get a screenshot of that. And I appreciate all of you for coming out today. Again, the form is available now. So if you want to provide feedback, I really appreciate it. Or just give us a quick shout out on there. I appreciate that so much. And I thank you for coming out this Wednesday, and you guys have a wonderful and great day.